Bitcoin, it's been in a massive bull run for most of this year. Ever since the March crash, it's just been going straight up, straight into profit for many investors. Personally, my crypto portfolio is up 50%. I'm stoked with that. I am very stoked with that. However, if you had invested back in March, back when it was $4,000, you would have gone all the way to $20,000 now. That is 5 times profit. That is outstanding returns. I didn't do that. I'm only 50% up. I'm still stoked. However, I'm also a Forex trader. And recently, well, over my past few videos, I've been looking into the MACD strategy from Trading Rush to see if it is in fact very profitable in the currency markets, in the Forex markets. This time, I'm going to be taking the same strategy and seeing if it works in Bitcoin. We know in Forex it is very profitable. I showed one time in 3 weeks you could have got a 22% return only risking 1% of your account, which is awesome. That is very awesome. That is outstanding returns. Does it work with crypto? Does it work with Bitcoin? Let's find out in this video. If this is your first time on this channel, I'm using the MACD strategy from Trading Rush. The rules are you can only take long trades when the price is above the 200 EMA and only take short trades when it is below the 200 EMA. The MACD is the entry trigger. When the price is above the 200 EMA, the entry is when the MACD goes below the zero line and crosses below the zero line. That is your entry. Now, I'm only interested in taking long trades for Bitcoin. Here we are on TradingView on the Bitcoin chart. Now, for this experiment, I picked the weekly chart and I picked 3 segments to trade this strategy in the long direction only. And I picked the 3 segments I picked each lasted for a 3-week period, and I compared the profits across different time frames. So the first week I picked was the 5th of October. I picked that week because it is the first bullish week after a consolidation pattern and breaks out of this small doji weekly candle. The second week starts on the 19th of October. It breaks out past a small doji candle, so that's why as I entered on pick this particular 3-week cycle. The third time is the 26th. I picked the 26th because this is a breakout above the previous high and a close above the previous high. So that's why I entered for that particular week as well. Each one lasts 3 weeks. So 1, 2, 3. And for the second section, 1, 2, 3. And for the third section, 1, 2, 3. I compared the profits you would have made trading this strategy on the 1 hour, the 30 minutes, and the 15 minutes each. I also had a look at how much money you would have made if you had dumped your entire Forex money into Bitcoin at that time and waited till it went up and got out at the same point. Okay, before I show you the results, let's dive down into the 30-minute time frame and have a look at the conditions that we were trading in. As you can see on the 30-minute time frame, we have the MACD, the 200 EMA, and these are all MACD cross triggers. As we can see, they do lots of triggers, lots of long triggers. However, this entry is below the 200 EMA and is disqualified. This entry would have won beautifully. This entry likely would have won maybe. But yeah, there are large periods of where the MACD is below the zero line and entering triggers, but it's really flat, like through here. This would have got you a string of losses if you had taken every entry. So from my observations, though this does produce many profitable trades, there's a lot of flat sections, and that really detracts on the amount of profit you can potentially take. And you'll see this in the results. Here's another example. Here's more examples where it's just gone absolutely flat and you lose. The entries are all below the zero line, the MACD, but you end up making losses because it's so flat. And this is the entire time frame. It's just, though you can see it's a big uptrend, uptrends in spikes with lots of little flat sections. So smaller entries on lower time frames do work. You just need bigger stops, and much bigger stops than are provided with this strategy initially. So let's go have a look at the results. For my first 3-week segment from the 5th of October to the 26th of October, the 1 hour chart had 4 wins, 2 losses for 4% profit. The 30-minute chart had 5 wins and 5 losses for 2.5% profit, and the 15-minute chart had 8 wins and 10 losses for a 2% profit. So as you can see, all 3 were profitable over that period of time. From the 19th to the 9th, the 1 hour chart had 9 wins and 1 loss for 12.5% profit. The 30-minute chart had 8 wins and 7 losses for a 5% profit. The 15-minute chart had 8 wins and 12 losses for a 1.5% profit. Still profitable. From the 26th to the 16th, the 1 hour chart had 11 wins and 0 losses. The 30-minute chart had 10 wins and 7 losses for an 8% profit, and the 15-minute chart had 5 wins and 18 losses for a minus 10.5% profit. Blindly trading this strategy, the 1 hour chart is significantly more profitable across all 3-week segments that I picked. The 15-minute was making a lot of losses, as we could see, but the 1 hour was filtering out those losses. Now, there could be a number of reasons for this, but I'm taking these large, flat accumulation sections as reasons for why those losses were taken. Just the stops were getting pinged out in the range. So trading with bigger stops would have improved the results dramatically. Where you would put those stops is up to you. More than maybe 3 or 4 times the ATR would work. The other thing I'm noticing just looking at this chart is it accumulates and there's a big breakout. It accumulates along here and then there's a big breakout. Large accumulation and then there's a big breakout. If you traded the big breakouts, you could have made a fair bit of money. Now, what would be really interesting is if these breakout times correlated somehow with, say, the US session or the European session or some other session. That would require some investigation. I'll let you guys do the investigation there. For an interesting comparison, instead of trading it, if you had removed all your money from the broker and just put it all in Bitcoin back on the 5th of October and taken it all out at the 26th, you would have made 22% profit. If you'd done it for the second segment from the 19th of October to the 9th of November, you would have made a 34% profit. If you'd done the same from the 26th to the 16th of November, you would have made 22% profit, which incidentally is far more than you would have got trading it with a 1% risk. To even match that, you would have had to have traded on the hourly chart. In the first section, there's no way you could have reached a 22% profit taking every signal on the MACD strategy. But for the second segment, you could have reached, on the 1 hour chart, instead of getting 12.5% profit by risking only 1% of your account, you could have risked 3% of your account to come out at 34.5% profit. And if you're really brave and risking 5% of your account, you could have come out at 57.5% profit. On the 1 hour chart for the third segment, well, that was a 16.5% profit for that period of time. If you had risked 2%, you would have been up at 33% profit, which is significantly more than 22% you would have gotten in Bitcoin. So is it better to trade Bitcoin or is it better to invest in Bitcoin? Well, it's better to invest when the value of Bitcoin is low. It's better to trade Bitcoin when the value is high. If you found my content useful, please like and subscribe. It means a lot, and I'm using it as motivation to continue to make these videos. Comments, I found amazing comments, and thank you very much for leaving comments. It's giving me some ideas of what to do videos about. If you have any more ideas, please suggest them. And yeah, my future videos, I'm currently thinking about seeing if this would have worked in the recent bull run on the S&P 500 and the Nasdaq. Also considering seeing if it would work in gold. Anyway, food for thought. Please let me know what you think.